Hi everyone, it's Lawani from ITTL again. So I want to finish today what I've started tomorrow of looking at this tool called Yahoo Finance and see what can really help you, what information it can give you when you're doing your own research. So yeah, we talked about this portfolio part, which tracks the things you really want to look at, which you can see I had something I called attention food, disruptive tech, and my list. You can use screeners to sort different assets when you want to analyze them or investigate and know what's really working. And these all markets, we all seen the stars, we all seen the futures, what these indexes mean, okay? So now we have also went ahead to look at some of the information that we could see on each company or each stock's profile, right? So we visited Facebook yesterday, and the Facebook stock, the page for the Facebook stock, we visited it yesterday, and we've been able to see a lot of information regarding here. We've understood basically this table about some of the information about like the previous close, market caps, all the kind of stuffs, okay? So now all we need to do, but you can see here some of the other suggestions, and still on the same page they will show you the performance of the company, but we'll come about this a little moment later into the financial section. So all I want to do is go ahead to the statistics part, right? Because this contains relatively more information than we've been thinking. Okay, so we can see it's classified into the valuation measures, the trading information, share statistics, and financial highlights. Okay, so let's look into each of them and see what it means before going quicker. So the market cap is something we have seen already yesterday, which means if you're going to buy all shares of this stock, right, how much can you pay? It's $1.03 trillion. It's a relatively large number, right? So this is like the total market valuation of this company. Now enterprise value is measured from the books, right? Where you look at the assets, what assets they have, what liabilities, and that's what's used to calculate the enterprise value, which is equal to this. Now the difference between this and this is because this changes, the market cap changes almost every day as the price of the share changes, because market cap is nothing but the price times the number of shares available. Now trailing PE and forward PE and PE growth ratio. PE is basically nothing than getting all the number of the profit made by the company. The profit made by the company is this E, which also is the same as earnings, and the P is the price of the share of the company. That's basically meaning like you get this price, this one 366, and you do divide it by the earnings per share of the company, right? How much profit has it made from, like, I can show you the simple formula somewhere. I'll try ratio formula. So formula, you can basically see like you get the market price per share, which is this number I was showing you here, the top one, this whole 366 something, right? This one, and then you divide it. Earnings per share. Earnings per share is basically nothing than getting the total profit that the company made, and you divide it by the number of shares, right? That's what we call earnings per share. And basically this is the value. You can see the formula right here, right? Market price per share over earnings per share, and that is a PE ratio. PE ratio is an important valuation because it tells us if the company is overvalued or undervalued. And in the case of Facebook, 27 is not really that bad. So this is the current ratio, and this is the forward ratio, and this is the ratio growth in 5 years expected, right? So it's expected to grow 0.89 in 5 years. Then when you look at the price per sales, now we get the price to divide by the total revenue of this company. Okay, so the price we've seen above, and below here we shall see a measure called revenue per share. Okay, this one. So we get the total price to divide the revenue per share, and what we're gonna get is this thing called price per share sales, right? And price per book, it's compared to this enterprise value that we've seen above. So basically all these things will help you understand if the company is overvalued or undervalued. You can do a bit more of research to understand more about these, okay? So I was trying to give you details so that you can understand what each thing here means. Now the P-square, it shows you when it starts and ends, that's easy. The profitability, it shows you profit margin, how much profit's making, 37% of, and the operating margin, we just get return on assets and return on equity. These are also good measures. But income statement, now this is when we start looking into the fundamentals a little bit, right? So income statement, you can see the revenues it's making, $104 billion. And you can see the revenue per share and the quarterly revenue growth. You can see that year over year, like from this year, this was the Q2 of this year, and compared to the Q2 of 2020, it's grown 55.6%, which is very good as I can say. Now when you look at the gross profit of this company, which is basically you take the revenue and you subtract the cost of sales, so you get this one, right? And this means earnings before interest and the tax and the dividends, right? Allocation. So all this, it's just basically this, it's the earnings, it's the profit before like interest on loans, tax or dividends, right? But the net income to common investors, the net income, which is basically like what we reported of, it's by 8.96 billion. This is the total income that will get reported, right? Now diluted EPS. Now EPS is called earnings per share. The net income is the same as net profit, right? So earnings per share, or earnings, basically earnings per share, what we do is we get this number and we divide it by the total number of shares, or what we call shares outstanding, right? Which is just this number, shares outstanding. We divide it by this, right? And what we get is this thing that we see called EPS, or earnings per share. I can say profits per share, the same thing. It's just this. Then when we look at the quarterly earnings growth, comparing this quarter, the second quarter of 2021 to the second quarter of 2020, we can see that the earnings really grew 100.7%. This is some crazy numbers. This company is, from these measures, as far as I've been reading, I can say, you know what, Facebook is a buy. It's a good company. It's making profit. Everything, you want to get invested into something that's making profit, isn't it? So let's look at the balance sheet. When we're looking at the balance sheet, we really want to know how much debt is there and how much cash does it have to pay the debt, right? So we can see the total cash is $64 billion. and the total cash per share is this. So the total debt is $12 billion. Compared to the cash they have, they can still pay the debt and they keep moving on, which is a good measure that shows that this company is it's really in a good position. And the total debt per equity, which is basically you divide the debt part that makes up the capital to the equity part that makes up the capital. So we shall see this in the next part maybe, which is 9.09. And the current ratio is an important thing. When it is above 1 or 2, that's a good measure. But now when it's 5, it's way too good. So let's look at what the current ratio is and what does it tell us, right? Current ratio formula. So the current ratio is basically, it shows us how much the company is able, how much of the company is able to pay its current liabilities in the short term, right? So it's basically the ratio of the current assets over the current liabilities, right? As simple as that. Current assets divided by the current liabilities. Now, if this thing is 1, it's not good, right? If it's above 1, maybe 2, that means the company can pay the current liabilities and stay strong. That's too good. But in case of Facebook, it's a whopping 5, right? A very good thing. And book value per share, it's basically the whole thing we've seen before. We've seen the book value, the enterprise value, so nothing large. So with the cash flow, we see they show us operating cash flow and leverage cash flow. We'll come to this also later. So as you can see, this kind of information here, we look at the stock prices, how it's been moving in the 52 weeks. It's been going up 33.44%, and the market itself has been going on 31%, which means the stock performed better than the market. 52-week high was this, week low, 200-day moving average is this, and 200-day moving average is this. So 50-day and 200-day, it's these are valuations that they use in technical analysis, not too much of a meaning here. So the share statistics will show you the percentage of shares short. Now if you don't know what shorting is, you probably need to look at a video I've linked in the top right, that tells you what shorting is and why these measures are basically important, right? So you definitely have to check that video, right? So then here it will be showing us if the company is paying dividends. Surprisingly, Facebook, as big as it is really not paying any dividends by now, and this is something that you really need to know, right? It's not paying any dividends, which means if you earn anything from this company, it's gonna be share appreciation, right? Which is basically like the share has been this for this time and now it's this. When you look at the profile, it will show you what is the business model of Facebook. It will take you to the investor relations page, which is important because it gives you a lot of information, and it will show you the key executives. Mr. Mark Elliott Zuckerberg, founder and CEO, and that's why he gets paid, and that's when he was born. So all this kind of information, and basically the sector through which it works into, right? This is Facebook, and you can see here there is oh no, wait, it's okay. So the other part that we would look into is the financials, that shows the income statement and the balance sheet and the cash flow. These things, it's not something difficult, but when you're doing analysis of any of this part, you just compare to the year of the period before, right? So that's the way you do with the income statement and the balance sheet. It makes sense. If there is anything you don't understand here, we probably can review it in another video, because this one is getting a little bit longer, right? So yeah, if you quit here, thanks for joining. I think this portal is something you can experiment with yourself and you can really find it interesting, okay? So yeah, see you next